Yes, so now we will move on to the other aspect. Called performance obligation for intellectual property rights. Now we have seen over a period of time, at a point in time, but how it is going to work for the intellectuals, that's for general. Like for example, my classes, video classes are an intellectual property right. Is it fulfilled at a point in time or over a period of time? Listen to me, it's the video classes. Okay, so in physical classes, okay, you may say over a period of time. Which condition? As and I deliver, you get to consume the benefit. Again, somebody need not teach you right from the beginning. Now, when it comes to say recorded lecture, is it at a point in time over a period of time? To show you, I'll give you an example. See, there's a KFC gives one franchise rights to Mr. X. Maybe. And that KFC will pay a fees of he will pay rupees 5 crore rupees fees upfront. Should I pass revenue bank account debit to revenue 5 crore? Will KFC pass? Alternatively, T series gives Mr. X right to play the song. Say T series is one producer. They have got one tune. 1957 one tune, Roja Jane Mon, or some beautiful song has been designed, which is a forever evergreen song. Now somebody is holding that right. No, simply you cannot go and play. That person can sue you, telling my property, how can you use it with my permission? People do it, forget it. And somewhere we will see, that is the business of the people. How to there is one beautiful interesting thing on IPR, we'll see some other chapter. Now he will also pay 5 crore upfront. Now will T series pass bank to revenue 5 crore? Both will do the same accounting. Bank account debit to revenue, both will say S to 5 crore. Because what they happen now, both the transferred intellectual property rights. Somebody transferred their permission to use their logo. Somebody transferred their permission to use their song. But the amount is going to be different for both the people. Why? For this, we need to check whether the performance obligation of KFC or T series is over a period of time or at a point in time. Now the standard says, look, we have to apply certain condition, and it says that anybody's access to intellectual property is considered over a period of time if all of the three conditions are met. Remember, if something has to be over a period, any one of the three should be fine, what we have studied. But here, if something has to be over a period of time, in all three has to compulsorily fulfill. Condition 1, entity is required to undertake the activity that is going to affect the licensed intellectual property. Only thing you need to see is it yes or is it no? The moment you say no, anyone, it is at a point in time. The moment you say yes, 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 it is over a period of time. Second, the license exposes the customer to the effects of entities' activities. Like if anything KFC does, is it going to affect the logo of KFC? That's what we need to test. We'll test that. I have given here. These conditions I have given here. We'll apply these three. And the entity's ongoing activities do not result in any transfer of goods or service other than performance obligation to transfer the license. And it says that if any one condition fails or all the three conditions fail, then it is a point in time. Let us apply these three conditions here. 1. Are you required to take further activities which affect the intellectual property rights? Yes, KFC has to do continuous branding. The day they stop the branding, the revenue of Mr. X is going to fall. Followed, no? The day they are going to stop branding, revenue of X is gone. That means you cannot say it is at a point in time. It is over a period of time. Because if the franchisee agreement is for 5 years, for next 5 years, you have to do the branding. So what I paid you 5 crore is not right now. I paid you 5 crore to use this plus do a continuous branding, because who does the branding later? Who gives the KFC advertisement? The franchisee will give or KFC will give? KFC will give. Franchisees will never advertise. Domino's will advertise. And that if they stop advertising, no, people will not come to your franchise either. But in this case, am I supposed to do anything afterwards once I give this song to you? Not required. Once the song is given to you, you can play that song. It's not required that the one T series has to do something so that I can use this song. Or the day they stop doing something, I cannot use this song. No. Understood the difference? Are you clear? Because questions are there, exam questions are there. Clear? Second, exposure to affect entities. Exposure to affect entities' activities. Now, did franchisee has got exposure to KFC's activities? Like KFC's, in news comes that they used one hybrid chicken. Something like that information comes. Is it going to affect your franchisee? Yes. Now the T series, you come to know the news, the T series are involved in smuggling. Say for example, no, I'm just telling for the sake of example, yeah, because that also should not create a problem. No? Now, is it going to affect this song? No, song has got a standalone functionality. Song doesn't have any exposure to the activities of the owner of the IP right. Song doesn't require anything once it is handed over to you. The third, the ongoing activities or branding, whatever, is it going to give you anything? No. Nothing is transferred to you, no. Anything new product has been given to you? No, you are given only the license. You will continue to use the license. Here, grant of license is the only, that's what, it doesn't matter. For T series also, once you give, afterwards whatever T series does, the client will not get any benefit there. Followed, no? Understood? So, depending upon that, you have to say whether over a period of time. Why? Because all the three conditions fulfill. Since these two conditions don't fulfill, you say at a point in time. That's why, if when the 5 crore is given to T series, instantly they will pass the entry, bank account debit to revenue 5 crores. Why? Because once it is delivered, I have nothing to do more. From my side, revenue is done. I am not supposed, and whatever I do, it's not going to affect you. And whatever my ongoing activities will not give you anything new. Like suppose, say for example, video classes. Does it has got a standalone benefit? And whatever I do, is it going to affect that? Now, I may speak something differently tomorrow. I may fight with somebody, I may slap someone on the road. That it will come in the news. It will not come somewhere, right now it will come somewhere at the 4th page or 5th page, somewhere small. But suppose, if I become a celebrity and I slap someone, front page it is going to come. Is it going to affect the classes what you have already purchased? No, that's exactly. That's what we need to evaluate. That means the day payment is done, for me it is a point in time. But if which one? But for you, is this right? Can be used as a standalone basis? Yes. But if it was not an recorded lecture, it is an online lecture. Like, at least like this, you are not sitting here, you are sitting in my home. You are at home and we are doing an online. It's not recorded. Is it going to affect? Yes, because if I slap someone, I'll be behind the bar. Will the classes happen? No. That means in such case, I cannot recognize the revenue on the day one of money receipt. I have to split it over a period. Have you understood this logic? Which one? It's a product, but it is an intellectual right. No, what you give? I gave one right to use it. No. Yeah, I gave one link so that you can download that song and play it. You paid 5 crore. You paid for 5 crore for that MPJ file. No, you paid the file for the content of that MPJ file. It is like intellectual property. It's a copyright. That's all copyrights, trademarks, logos, intellectual property. Yes. If it is given to an agent, again, can he sell it on a standalone basis? I have sold to my agent. I have sold to my agent. Again, that agency principal relationship comes. Consignor, consignee, we have got there, bill to hold and all. We have to discuss that. See, for example, that agent has fully purchased and made an outright payment to me. I am done. Why? Because see, again, it may happen that as per the agreement, I have already promised you that, okay, take this class. Updates also will be part of this up to so and so attempt. Now, this product cannot be used unless the updates will come. That means I need to do continuous activities. That means unless I give you update, that means it is over a period of time. So immediately say, for example, 80% I will recognize revenue. But since I have promised to give you update also as part of this contract, when I give you update, I fulfill full and recognize the balance. Just apply anywhere. You see how beautifully. Perfect? Understood, no? Yeah, again, so many things are to be evaluated. If I give to the agent, whether he's an agent or he's a principal there. All those things has to be evaluated. I may bill him, I may not deliver him. These are all the people used to do. Okay, so at this point of time, we have done with this part. The next is the special cases we have to learn. Contract liability means customer has paid, but you have not done anything. It's like cash in advance, advance from customer. Contract asset means you have not satisfied, the entity has satisfied the performance obligation, but it is contingent consideration other than passage of time. Like I have given to you pineapple. If you like, you pay me. From my side, and you have take, I will give you 1 day to decide. So from my side, performance obligation is done. The moment I deliver it to you, I will recognize contract asset. But I don't have a right to receive the cash, because my right to receive the cash is not dependent on time. It is dependent on your condition. But the moment it becomes unconditional, or you are delaying the payment only because of the passage of time, EMI payment, yes, I will recognize receivable, and the moment it becomes receivable, it will jump into 109. And the condition to recognize contract asset and receivable is same. Then you asked me, why contract asset 1 lakh in that example? Or if otherwise there is a mismatch, no, what you transfer from one place, it's the same thing. Changing its name. Because some place the contingency consideration was contingent. That's why you treated it as 1 lakh, but you didn't treat it as a customer. The moment 90 days expired, that becomes a customer to you, because you got a contractual right to receive cash. Previously, why you didn't say customer? Because it's not a financial asset. Because customer may pay you cash, or he may return the goods. You don't have a contractual right to receive the cash. And that was, it was part of 115 only. And as part of 115 only, you recognize at fair value only. Or we can return the goods. No? The moment, and do you have the control over it? What he is going to return? He will pay the cash or he will pay the goods? No, that's why you cannot treat it as a financial asset. As simple. Perfect? Yeah, 115. Right to receive the goods or right to receive the, like, 115. The moment it becomes a confirmed right to receive the cash, yes, it will shift to receivables. Anyhow, doesn't make, that's for your academic interest right now. It doesn't make any difference in whatever accounting or whatever questions have been asked in the examination. Just to know it. So I also very happy to know this distinction. Why we call sometimes as a contractual asset. Maybe in interview they may ask you. You one bullology there. Okay. Chalo. So now let us last part of this we will discuss intellectual property rights related questions. Now entity music record label licensed to a customer 1975 symphony of noted orchestra, some tune. The customer, a consumer product company, has the right to use that recorded symphony in their commercial ad. Oh, 1970s story, no? They wanted to create an ad so that they can attract the attention. Nice. But simply they cannot use, no. This company will file a complaint. How can you use my tune? So they took for online advertisement for 2 years. In exchange of license, they paid 50,000 rupees per month and did not include any goods or services other than this tune. They will not get anything. The contract is non-cancelable. How the revenue will be recognized? Over a period or at a point in time? At a point in time. How do you say? Because there are 3 conditions. Did all the 3 conditions fulfill, all the three conditions didn't fulfill or any one condition didn't fulfill? Which all the three conditions? Because this is an IP, right? To recognize the revenue on IP, intellectual property rights, you have to apply three conditions. Because first you should decide, is it over a period or at a point? So which all the three conditions? Condition 1, entity is ongoing activity. That you start with. You say that ongoing activities, is it going to affect the license? No. Yes. That means one of the conditions didn't fulfill only. So you need not check it. The moment one didn't fulfill, you say at a point in time. Because all the three should be fulfilled. Which is opposite to any one should be fulfilled for over a period of time for other than IP. For other than IP, any one should be fulfilled to be over a period of time. For IP rights, all the three should be fulfilled. Now, the license exposed to the customer, no, license is not going to expose. And did you transfer anything else? No. So, forget it. After one, you need not check it. So, all the three didn't fulfill. That's why you say at a point in time. So, the day this orchestra company will transfer the tune to that company, no, you can recognize your revenue. 50,000 rupees per month. Okay. For 2 years, no? What accounting entry will pass? See the consideration, very beautiful, intelligent question. You will pay record of 50,000 rupees per month. What accounting entry you are going to pass? Bank account debit? How much? How much? How much bank account? Be careful, read this question properly. What journal entry this music recording company is going to pass on at the inception? Is there any entry at the inception of the contract? When, okay, what is your performance? How many promises are there? One, what is that? Give you the right. What is the transaction price? Fixed consideration, how much? 50,000? Into 24. You didn't read, and that too, see, this is what they do in ICA exams. This period, no, they give in English, not in numbers, to check your eyesights, observations. Some followed, no? Have you observed that? Otherwise, you may see, this is intentionally, Baba. They could have given 2 like this, no? In number, they don't do it. Understand? Okay. So, your total consideration is 12 lakhs. Okay. Next, we will move to the, is it allocation required? No. We'll go to the last step, revenue recognition. When I can recognize? The day that you should say, the day performance obligation is fulfilled. When the performance obligation is fulfilled, you should say the day control has been obtained by the customer. Then I'll ask you when the control has been obtained by the customer. So that depends upon whether over a period of time or at a point in time. Now, is the control obtained by the control over the intellectual property is obtained by the music, that company, over a period of time or at a point in time? On what basis do you say it is at a point? No, that's what, see. Now, when I analyze, you get into different conclusions there. On what basis do you say that it is at a point in time? Those 3 conditions didn't fulfill. So, that means at a point, which was the point? The day you signed the contract. So, what accounting entry you have to pass on the inception of the contract? Contract asset or customer? Can you cancel this contract? Non-cancelable. That means your hand on his neck, no, for next 12 lakhs, so anyhow you have to pay you. Whether he will use it or whether he will not use it, 12 lakhs he has to pay to you. Sorry? Per month. So for next 2 years, 50,000 he has to pay you. Next year. So total 12 lakhs is he supposed to pay you. Can tomorrow after, sir, no business only, I want to cancel the contract. Will you also cry along with them? No, that happens. You say, it is your headache, Baba. I told you, business, no emotions there. Now you will get that full 12 lakh. And control when it was transferred. The day contract was signed. And after that, let's see. Will he get that control only after the first month payment? No. He will start using when? On day 1. Immediately will give to into that advertisement company, please incorporate get my name. You create a song using this tune by my company's name. On day one only this work starts. So when the contract is signed, the accounting entry is customer account debit to revenue 12 lakhs rupees. Yes. That depends upon at a point or over a period, no Baba. That's what I'm trying to tell you here. Whether this income is for 2 years or it is now. That depends upon evaluation. Now, are you supposed to do anything once you hand over this? No. Is any of your activities are going to affect this? No. Are you given anything extra other than this? No. Then it is at a point in time. It's like my recorded lectures. Why I should recognize over, see, is there a condition that over a period, whatever time you read, that much I should recognize? Some student will not read only. So should I not recognize revenue? Catch point. So I need to pass the accounting entry for revenue recognition. In this case, on the day the contract is signed, the passing entry customer account debit to revenue 12 lakhs. And from now onwards, as and when customer pays me 50,000, and I need to check, is there any significant financing component? It is there because 50,000 is pending. Can I apply practical expedient? No. Since the payment is going to happen for 12 months, that financing component I may have to remove and show it as a financing income. So revenue is not 12 lakhs. Revenue will be the present value of this 12 lakhs. And then onwards, I will prepare an amortization schedule. Bank to customer, I am going to do, and I am going to kill this customer once over a period of 2 years. If it is doesn't matter, no. No, again, if that is the case, then you say first condition is fulfilled. Then is that going to affect the singer commits one like this thing, commits suicide? Newly released song, but the singer has committed suicide. Is it going to affect this? No. The moment you say this didn't affect, it becomes at a point in time. Because to be over a period of time, all the three should have been fulfilled. This is the catch, students. This is the trick here. And see the difference it makes in the accounting entry. Are you convinced? I am telling you, please come with the permutation and combination questions. No problem. I am happy. For that you are thinking. Yeah, clear? Okay. So that's what we need to check here. Let's see, again, they may ask you the journal entry, that is why they should tell you 50,000 per month. So understand, but journal entry is not one thing here. You have to explain the theory, that why you have to pass recognition right now, because it is at a point in time. So I'll move on to the second question. 12. Transaction price, fixed consideration. That's what, because he's a customer, I'm going to get in a staggered bill. Where matching, Baba? That's what I'm trying to tell you, because it is already a finished product of mine, which you are going to use over a period of 2 years. If it's already my finished product, should I not recognize right now? Or should it depend upon the customer usage? If it was not a finished product, if it was used by the customer as and when I finish, then you say over a period, and then you recognize over a period. It is not, that's what this is. You want simple, no? You make it simple. Why you are getting it? That's what people do all this time. Now you don't have any option there. Beautiful conditions have come and universal conditions. Don't come with the matching there. It will go for, no, understand from a principle. Is it not a finished product? Then, if it's not a finished product, then as and when you finish, you recognize. That's what they say. Are you supposed to give anything extra after delivering this? Yeah, that means what you delivered was an unfinished product. How can you recognize at a point in time? You should recognize over a period of time. Perfect? Yes. Now see this. Beautiful. Sports team D enters into a 3-year agreement license with its team name and logo to apparel market. Say, for example, apparel market, say Nike is there. Nike has entered into one sports team D. License to permit M to use the team's name, this market, on its product. The team's name will be used, like Chennai Warriors on my shirt or something. I'll come. Simply, I cannot print any t-shirt with the Chennai Warrior. No, that person will sit on my head now. How can you use my logo on your t-shirt? So they have permitted to use it, display products and marketing. What is the nature of the license in the above case? Intellectual property, IP. Modifying the above facts, Team D has not played games in many years. You see one more type of business, very nice business. Huh? That's what I was telling you some time back. Team D is a dormant team. Once upon a time, in Kannada we call Hale Huli. Hale Huli means old tiger. No teeth only now. No, nothing. Tiger is there. It was tiger then. Now, licensor, and the licensor is brand collector of B. An entity acquired old team and brand names and logos from the defunct entities in the financial distress. So somebody called Mr. B goes to this defunct company and say that, will you give me your right to me or to use your logo? What that defunct company will say? Okay, because it has nothing to eat now. Once upon a time it was a tiger, now no teeth. So whatever you get, nice, no. That defunct company will give the transfer of IP rights to them. Now what B does, no? Why is he mad? No, you see the master plan of B. Mr. B's business model is to obtain settlements from the entities that use IP without the permission and without undertaking any ongoing activities to promote IP. That means I will not promote this brand. I will go and look around. I see that there is one saloon. That saloon has used this photo of this old tiger. I'll take the picture. I will record it. Okay. One fine day I'll send one legal notice to this saloon. Have you seen, no? People use this photos of film actors and all that. Have they taken permission? Amitabh Bachchan's photo somebody has taken that. Has he taken? Amitabh Bachchan can file a complaint, no? This happened in Kannada movie. One of the star's photo was not used, permission was not taken, and in one incense sticks, his photo was put. 75 lakh rupees, he got a compensation just for using your photo. And this person will go and file a complaint with that and say, either you sell your saloon or give me 10 lakh rupees. Nothing, you can't do anything because you have used the intellectual property right without the permission. And who is the owner now? This B is the owner. Nice, no? See, this is what people do. Now, would your answer be different in the second situation? Okay, nature of the license means at a point in time or over a period of time. This is what they are asking. Is it over a period of time or at a point in time in the first case if they are active players? Over a period of time, because they have to continuously play well so that your t-shirt will get sold. In the second case, it is at a point in time because the moment they deliver, their obligation is done because they cannot play anymore. They are the different brand. But I will use that brand for my purpose. Followed, no? So first you will tell same story. M expect to undertake continuous activities. License, their actions are going to, because if that team gets a bad name, your t-shirt sale will stop. And besides this, they don't transfer anything else. So since all the three criteria are met, for the first scenario, it is over a period of time. That means when this B will pay some money to that apparel company will pay to the D company, no? The D company has to recognize revenue over a period of this contract, say 2 years or 5 years. But in the second case, when Mr. B comes and say give one money, see, they need not do any further activity, even though they do. First of all, they are not playing only. So first condition itself didn't fulfill. You say it is at a point in time. That means whatever money they received, even though my contract is for 2 years, I can recognize the revenue right now. Understood? Now, franchisor Y gives the license to operate for 10 years. Upfront fees is paid. What is the nature of the license? Again, we discussed in detail. So you have to do all the three conditions. So it is over a period of time. Yes. Now, Pogo. This is a new example given in the study material. Now, Pogo created a television show called Chota Bheem. Now, Pogo grants a 3-year license to a toy manufacturer to create the Chota Bheem toy. That's an IP. Now, God knows how many people are doing Chota Bheem toys there. One fine day, no, this Pogo will go there It can close this company. That's why as an auditor you should see non-compliance with the laws and regulations. It is hiding. As of now, you is not sitting. But one fine day it can come and close your company. As per the contract, Pogo will continue to produce and popularize the show, making toy manufacturer produce and sell Chota Bheem show. What is your over a period or at a point in time? Over a period. It's like a franchisee only. Okay, you say that all the three conditions will be fulfilled, direct exposure is there, no other performance over a period of time. Understood, students? So these questions have not come in the examination, but you understood the difference between over a period in the two circumstances, and in that over a period, in input method, one special adjustment is sitting. Yes, with this we are done with the revenue recognition. Pick any one question. On the while walking, pick any one store. Apply this 5 method, 5 model. You know what accounting entry to be passed. This is the way you have to analyze every single question by applying the 5-step model. Followed, no? Yes. So we will move on to the other thing, next part called the special cases. See, special cases are mixed then and there itself, okay? But I have given you separate now. So that first my objective was to explain this 5-step model. Because if I bring all these things also in between, then it may create a confusion. Now, since you have understood 5-step model, now let us understand one by one of these 7 special cases of revenue recognition. Out of this, all are important. Anything may come for the exam. This has already come for your exam. Sale with the right to return is there. Bill and hold also has come for the exam. Customer options have come for the exam. This is only one question, is a very highly probable question sitting in the exam for your exam. Okay, first is the principal and agent. Since we discussed in detail, I don't think so again we need to discuss. Like OYO somebody has booked through OYO 100 rupees. Question is whether revenue should I be recorded at 100 or 10. Now multidisciplinary thing says that this decision you have to keep in mind the taxation also. Because GST, if you say you are a principal, GST is going to come on this. Then input tax credits are going to come into picture. If taxation, you need to see if taxation will be on this. See, you have to check the implications, Baba. So you need to know what does my accounting says, what does my taxation law says. There are two taxation laws. On one taxation laws may say speak in different ways. Okay. Now we will evaluate from the accounting perspective. Will you pass revenue entry for 100 or will you pass revenue entry for 10? Now in some contracts, not in all contracts, entity's customer receive goods or service from other party who is not a direct party to the contract. The contract happened between OYO and you. Make my trip and you. But who is providing the service, goods and service? Some airline company, Tata Airlines or Indigo Airlines, who is not a party to the contract between you and me, no. Now in such case, you have to consider the nature of the promise to check who is the main party to provide goods and service. If the entity itself, then it is a principal. If they arrange for other party to provide, entity is an agent. Then you cannot tell as per my wish. So there is some indicators that entity is the principal. So these are all the tests you need to apply. When entity controls the goods to be delivered, yes, by default you are a principal. Now what do you mean by control? Control indicators, we have already seen that. First, performance 5 indicators of control were there. If at all you got the control over the goods, what you need to deliver to the customer. Yes, that means sometime OYO will do pre-bookings. They say that, look, Baba, whether customers are not going to come or not, give me one room on rent for 365 days. Now that room, I may keep it vacant or I may sell double the price or I may give free of cost. Now I am a principal for that room, no? Understood? Do we know this arrangement? Sometimes do you know, have you observed this? OYO will give the room at lesser than the price which is charged by the property themselves. How? How on earth is this possible? Why? Because you take the inventory. You have become owner of that room without investment. It's like an ROE asset for you. And you have, since you have negotiated well, so since you say that, sir, I want this room for 365 days, definitely you must have got at a concessional price. So you charge higher than that, you will maintain a very minor margin, say 50 rupees. But that 50 rupees margin is very low as compared to what they will charge, because you got at a fixed price now. Your objective is to recover that fixed price throughout the year. So on the day of Christmas or New Year, it's the season time, when they will charge 5,000 rupees, but I will give it 2,000 rupees, so that you get attracted to my website. You are very happy and you become a loyal customer to me. These are all the marketing things. Followed, no? So you may get a good deal also. And that depends upon how much exploration or research you do. So since the identification of the principle is not always clear, it provides certain indicator. First indicator, who is not compulsory, okay? It's not that every conditions are met then only. It's just an indicator. Now, who is primarily responsible for fulfilling the contract? This is what you need to test. Second, does the entity has got an inventory risk? Like you go to the Make My Trip is there. What Make My Trip might have done with the Indigo? They might have told, look, 10 seats every flight you give it to me. Reserve for me. If from my side no booking happen, the 10 seats will be vacant. You have to fly without any this thing. That's an inventory risk. See, when I assume inventory risk, understand, I get the discretion to establish the price. Now you book the same flight ticket by paying money to the agent next to your house. One guy is there. Have you seen that? Some local travel agent is there. Is he a principal or an agent? He is the agent, because he will not take any inventory risk. He has not entered into any contract with Indigo telling give me one seat forever. Every day I will pay you price of that. No. He will book you on your behalf. So he is a principal agent. He has to recognize only commission. But a Make My Trip could have arranged into such arrangement where I will get the risk of inventory. If you say, yes sir, Make My Trip has got that, then he is the principal. Now tell me Zomato. What about Zomato? Zomato is a principal or agent? Do you know? You think he is an agent, no? Does he has got a discretion to fix the price? He might have had, no, see, what he might have told with that party, like biryani, you give me at a fixed price of 100. What I will show is my price. I may sell at 80 rupees also. They sell, that means otherwise this party has to close, no? How can you sell at 80 rupees? That means you might have taken a control. You might have negotiated with the inventory, and if it is not getting sold, he say fixed 50 biryani per month, I am going to place order to you. Whether people will place order to me or not, the secondary. At the end of the month, I will give you order for 50 biryanis. Then inventory risk comes to me. That means at whatever price I give, you have to deliver it. Inventory, because if nobody places order, am I not going to tell this, should I not pay 50 biryani or money to this restaurant? I have to pay. That's an inventory risk for me. If I am a pure agent, then I will not take that risk, no. If I get the order, then only I will give it to you. And because of this fixed contract, I was able to negotiate. Generally, he sells biryani at 100 rupees. Through me, he will sell at 8. I can sell at 80 rupees. See, understand, student, there is a risk to that restaurant owner also. Why? The moment I start selling at 80 rupees, nobody will buy directly from the restaurant, because restaurant price is 800. Everybody is routed through Zomato, and one day what happened, no? That restaurant guy closes his menu like this, because nobody is coming there, and he has become a cloud kitchen there. And Zomato will start charging you 150 rupees. You don't have any clue only, because you don't have anything to compare. That's why Zomato is going to become a, what you call, unicorn. This is the strategy. That's why by looking that, the investors will invest. And how it is possible, Baba, somebody will give you 50%, 100% discount. Somebody is burning their cash, no? Who? Venture capitalists. And one fine day, this cash, they will recover from distributing to all the IPO investors in India. And they will exit. Nice business. And 4 times, 10 times valuation. And this is the way it operates. And see, as a CS, since we are the experts of money, we need to understand how it operates, because it has got accounting, their practices has got accounting implications. because they depending upon their practice, accounting is going to change and they can fool the people out there. Followed, no? And depending upon accounting, the fund, whether it's going to come to you or not, it's going to change. Because if your debt equity ratio is very high, somebody will not give you interest at a lower interest rate. And to get low interest rate, I can change my accounting here. It is fooling. How? By changing my business practices. So I have to understand. I have to give the accounting effect to that, changing in your business practices. Anyhow, are you clear, students? So this inventory price and risk are interrelated. So what you need to do, if you are the only one who is giving service, no third party is involved, is there any evaluation required? Indigo himself selling tickets. Who is principal here? Indigo. Problem comes only Make My Trip sells Indigo's tickets. So entity is the principal. If yes, if the other parties are involved, then does the entity controls the goods? If yes, entity is the principal, no other party. If entity is not controlling, then also there are some indicators. Are they primarily responsible? Do they assume inventory risk? And do they have discretion to set the price? If all these conditions seems to be satisfying, it is an indicator. Yes, entity remains to be the principal. And if you become principal, entity can recognize gross revenue. If you are an agent, you can recognize net revenue. And if you are going to recognize net revenue, then that AC example and all, you will not add that. That's what they told. As per para B55, principal, they were assumed to be a principal. What is the meaning? That means you can recognize gross revenue there. But to what extent? To the extent of cost. Why? Because 4 conditions are fulfilled. Yes. No, that's what, it is an indicator, it is not a hard and fast rule. Okay, whether they discrete, that's what, when we see the question, you understand. It's not a hard and fast rule that all the 3 conditions to be met, any one or no. Somebody has to, auditor particularly, has to apply, first management has to apply their judgment. Am I a principal or not? Auditor has to apply their judgment in the given case. And then they have to make a judgment. Otherwise, given an option to Zomato, what Zomato will say? I am a principal. Why? Because your P&L looks very beautiful, no? Revenue 4,500 crore. Out of that, how much is your profit, Baba? But it can be possible that 4,500 crore is earned by taking risk, inventory risk. Then makes sense. It is not a hotel's revenue, it is really your revenue by you have taken risk there. But if you don't take any risk, why? You come and just transfer it like an agent, then how can you show P&L 4,500 crore? What is your risk there? Nothing. Understood, no? Net effect is about the presentation. You can fool, no? They're telling some other story there outside world. Yes, that's the purpose. That's what. Accounting net effect doesn't have any effect. Like that, if you see 109, we have done. Net effect is same. Lease. Net effect is same. But you see, how do we present it? ROE asset means somebody understand that this is, I have got a right over that asset, even though it is not my asset. That means I have taken one financing arrangement there. Interest expense should come there, which you never used to show previously. You used to show lease expenses every month. No, there is a depreciation expense should come. Interest expense should come because it is in the name of a lease, it is a financing arrangement to you. That's why outside people don't understand this. You need one more accountant to explain this. Baba, hige martidare. These people ऐसे कर रहे हैं वो कंपनी में. हाँ, अच्छा, ऐसे करते हैं, हमें पता ही नहीं. अरे, that is why we are there, no, to bring this out. That they should not say we didn't knew. Yes. So first thing, now you are very clear, fully ready to tell who is the principal, who is the agent. Okay, there is one exam question on this, sir. Yes, company D, you see how they will frame the question. Company D provides advertisement services to the customer. Clear? Now D enters into one subcontract with one multinational online video sharing company called F Limited. First of all, D is here, customer is here. You enter into contract to give some online video advertisement or something. Do you provide it? Yes, if you would have provided, matter is done. Where is the question of principal agent? But you enter into one contract with F. Now F places all the advertisements of the customer. That means who provides service to the customer? F will provide. Now D notes the following things. D works directly with the customer to understanding their advertisement needs before placing the advertisement. D's representative will go and talk to them and ask, what do you need? Where do you need that advertisement? D is responsible for ensuring advertisement meet the customer, because I will say I want one advertisement with so and so. You put some different advertisement only. Then that means it is gone. No, somebody has to bear the loss of it. It should be appropriate advertisement at appropriate places. Like for example, I want to put one advertisement. Say for example, in Gujarat I will go and I will put some non-vegetarian advertisement in one particular place where the community is all vegetarians. It is an inappropriate advertisement at a wrong place. No, who has to bear the responsibility? Somebody will do one mistake. Who will bear the responsibility for this? D. Exactly, you understand this. This is what they are trying to tell here. D Limited directs F Limited over which advertisement to place and where to place it. Now, who has got the discretion to sell? D does not bear any inventory risk. No minimum purchase. I didn't tell F, look, if customer places order, then only I will tell you. If customer gives me order, then only I will tell you where to place. If customer doesn't tell me, I will not tell you that, okay, in the year 50 advertisement I will give you. And D does not have any discretion, because F, based on F will quote something. Look, to put advertisement in that location, my cost is 5,000. Based on that, D will give quotation to the customer, my charge is 5,500. Prices are fixed based on the F's scheduled rate, because F is a very strong contender there. F already has got a price. Now what I will quote to the customer is F price plus my margin. Tell me whether D is the principal or an agent. Nice, no? Yes, what is your opinion, students? You are all sitting here with certain understanding about these principles. By looking at this question, what do you say whether D is the principal or agent? Prithvi is full, adamant. D is principal, it seems. Yes. Not sure. Agent. See, difference of opinion came. Yes. Agent. Okay. Understand, those last three are the only indicators, not the conditions. Okay. If we look into the crux of this, somebody has taken a primary responsibility. Who is D? If something goes wrong, D has to bear. So here you first tell the story that if the D itself is providing, he is the principal, he is arranging, other party is an agent. However, sometimes there is a confusion. So primary responsibility for providing advertisement is who is the face to the customer. If something goes wrong there, D is to help, and D does not bear, but they are only indicators. That's why D is considered, because they are only indicators. Simply because he didn't bear the inventory loss, you may not say. So tomorrow Zomato is the face. If something goes wrong, Zomato, no. Since he is the primarily responsible, simple. You have booked the order through Zomato. If biryani was not good, biryani didn't come, who will call? Restaurant you will call or Zomato will call? You booked the hotel through Oyo. There say the restaurant, the hotel property owner says, no sir, we didn't get any booking only. You are stranded now, on the way now. Will you fight with the owner or will you immediately call the Oyo? Now who is primarily responsible? That means Oyo must be the principal, no? So it is an indicator, followed, no? So in the given case, D is the principal, and it is a judgment, no fast and rule. Now let us see one more. Entity negotiates major airlines to purchase the tickets at the reduced rate as compared to the price of tickets sold directly by the airline. Why? Because you must have given some minimum commitment. Otherwise, how can you fix the price at a lower price? Now the entity agrees to buy a specific number of tickets, that is inventory, and pay for these tickets even though they are not able to resell. The reduced rate paid by the entity for ticket is negotiated and agreed in advance. Entity determines the price at which the airline ticket will be sold to the customer, and entity sells and collect the consideration as and when the tickets are sold, and there is no credit risk because upfront payment is obtained from the customers. Now the entity also assists the customer in resolving complaints, because at the airline time, if something happens, you are going to address it. However, each airline is responsible for fulfilling obligation with the ticket. Like if the service is not good in the airline, like instead of water, wine is given to you, and in the darkness you don't know, you drank that wine. Now who is responsible? Whom you will call? Huh? Whom you will file the complaint? Followed, no? That means all these related addresses, like flight got delayed, whom you will fight? You will call Make My Trip, or you will fight with the airlines there. Some alternative flight has to be arranged now. On the way, flight broke down, tire got punctured on the way. Now who has to arrange you, shift you to the alternative flight? Followed, no? So this is, now tell me, is the entity who sold you ticket is a principal or an agent? What a tricky question, no? But Are Baba, last time he didn't took the inventory risk and this. You told he is a principal. Here he is taking inventory risk. He is taking the price discretion. Understood? Huh? So here we will see. No, we have to see here what they are trying to tell. Entity considers the nature, and same story will repeat. And who is primarily responsible? Entity is primarily responsible because what is sold here is the right to fly, not the entire flight only sold to you. Followed? There, what was sold to you, OYO, what it sells, it didn't sells you the property, it sells you right to stay for one night there. So inventory risk is there, setting up the sale prices are there. So we may conclude, because all these are the indicator, that contract is for sale of ticket and not for the sale of flight. So who controls the ticket before it is given to the customer? Okay, can I give to anyone? I can give this ticket to anyone, no? Can the flight operator say, don't, you are not allowed here? No, whoever I give, they are permitted. Therefore, entity is the principal and recognizes revenue on the gross. Now, you see one contradictory type of confusing thing came, one this there, which is this illustration 26 and illustration 27. Now, this question came in the examination. Entity negotiates major airlines, no credit risk, assists the customers, each responsible. Determine who is agent or principal with suitable explanation. Now, what is your answer? Same. It's the same repeater. Entity is the principal because he has got a primary responsibility to sell the right to sell the ticket and not the flight. Inventory risk, discretion. So entity is the principal. 5-mark question. Correct now? 4-mark question. That's it. A very small aspect. There is no practical questions on this. It's only a theoretical question. In this theory, this is what theory you need to write, and then you have to tell. So very low chance this may come again, but if it comes, it's a bumper, because either the delimited advertisement question is going to come or this flight is going to come. Equal chances are there. So if flight comes, right, in both the places you write their principles. The chances of twisting is very low. Are you clear? Yes. Now we will discuss about the second type. It's called warranties. Is warranty a separate performance obligation? Have you taken assets with warranty? Yes, everything comes with a warranty, no? Now there are two types of warranty. Understand the applications here. It's called assurance type warranty and service type warranty. So in any warranty you have to see which type of warranty it is. Assurance type warranty is a manufacturer's warranty, which is a legal obligation. Anything you buy, minimum 6 months they give the warranty, or 2 months they give the warranty. That is a legal obligation. You cannot avoid it. It's law says that. For this we have to go to some act, say Sale of Goods Act or some other act, and see what law says. Law says that anything you offer to the customer, it should give that warranty. That's why they test it, they give some minimum warranty. So this warranty is not a separate performance obligation. It is part of that product only. Because this warranty cannot be purchased separately without purchasing the product. But there is a cost, no, for that warranty also. But there is a second type of warranty called service warranty, say 2-year extended warranty. If you want, pay that extra. Or I may club and give one single thing, oh, buy this with the 5-year warranty. You know how much difference it makes? I went to purchase one hard disk. There are 2 hard disks. One hard disk with the 2-year warranty, one hard disk with the 5-year warranty. No second thought, I purchased with the 5-year warranty. And point of time came when this warranty is within warranty time only, it was not recognized, that hard disk was not working. Okay. Then there was a lengthy process for that. Hard disk name, God knows all things. See, this is a marketing thing, students. And when they give 2-year extended warranty, the price or cost of that is sitting together. So it is lifetime warranty. You break it, we will repair it one time. You know, such type of warranty. They are a separate performance obligation. So you have to distribute based on SSP. Why? Because this warranty is a performance obligation performed over a period of time. And the product is the performance obligation at a point in time. Are you clear about this concept? Assurance type is the manufacturer's warranty. Like suppose you have purchased a mobile. Mobile will by default comes with certain warranty. How much? Without you paying anything extra. And every manufacturer will give that. How much mobile will come? 6 months warranty. They have to give you 6 months warranty. You talk any manufacturer, they will give you minimum 6 months warranty. There cannot be any single manufacturer who will not give you 6 months warranty, because it is as per the law. So since it is as per the law, it is my part of the product only, it is not a separate performance obligation. But Samsung can give you 2-year extended warranty. Nokia will not give you. And when Samsung gives you, definitely Samsung's price is more than that what they would have given you without warranty. See, I have got Samsung mobile with the 10,000 rupees with assurance warranty, manufacturer warranty. If you want 2-year extended warranty, will I give you at a 10,000 or will I give it to 12,000? Definitely more than that. What if I will give you 10,000 with service type warranty? That means there is a discount in this contract. It is a bundle of product. Whom you will distribute the discount? Both. On what basis? What is the SSP of service type warranty? But you don't give separately, no? That means you don't, will you sell only service type warranty? No, then that means you don't have a list price. Then how do you know what is your SSP for service type? Understood, no? Now you will look what competitors will, but nobody in the competition also doing it. Cost plus. No, that is also not possible. But before doing this, discount at a smaller bundle level as they are into them. Understood? Got the link? It's the same story. That's what I could have discussed this at that point of time. It makes that 5 steps very lengthy. All this principle, this, that, and all. No? That's why I have separated it. So this evaluation is good. How to distinguish between the two? Simple. Can the customer buy the warranty separately? Sir, I don't want your product, but can you give me the 6 months for warranty for my existing mobile? He will drive you away. He will not give you that. You say, sir, 2 years back I have purchased this. That 6 months manufacturer warranty, can you give me now? No. That means it is a, if you can buy it separately, it is a service type. No, you can't buy it. Okay. In that, whatever warranty, do you provide anything additional? Like manufacturer warranty is 6 months, but you give 1 year. Default on purchase. That 6 months is additional, no? That means it is assurance. See, one is that generally every manufacturer will provide you 6 months warranty. But this manufacturer will give you 1 month warranty. Now, out of 1 year, 6 months is service type, which you need not separate from the product cost. But that additional 6 months what you offer, no, that is an additional service, right? Which everybody don't do it, and legally you are not required to do it. That you will bifurcate and show it as an assurance warranty. So you are going to find out the SSP of 6-month warranty and the transaction price of say 10,000 rupees. You are going to distribute to the mobile plus service type warranty of 6 months and SSP of 6 months additional warranty. This you recognize the day you hand over the mobile to the customer, because your service performance obligation is met at a point in time, and this you will recognize on a SLM basis every month over a period of next 6 months. Yes. Charges were there, not there. That means what you paid, say for example you paid 350 rupees, they gave you one additional thing which every manufacturer will not give, no? That means yesterday when you paid for the calculator, that person cannot pass the entry bank account debit to revenue 350. What you need to do, that bank account debit, and he has to see how many, he has to estimate now, because every customer may not register. And on an estimated basis, he has to distribute 350 into two things called a calculator cost and extended warranty cost. And he has to pass two contract liabilities, say 340, 10. And 10 rupees you have to recognize 6 months from now, because up to 6 months your service type warranty is there. And after 6 months, the 10 rupees, say for example, every month 2 rupees something he has to recognize. That's what, no, that is the discount he gave you. Otherwise you should have paid extra. And that's the reason you purchased. Because if it was at SSP, like for example, I purchased Apple tab. They told me, do you want extra this thing? You have to pay something. First of all, going and buying Apple tab means cost will mount one after the another. Case means one more extra cost. You start with some small budget there. Then suddenly you see that pen is going to cost you 10,000 rupees. Then suddenly you see that one more case will cost you 2,000. The budget will cross, and then they will come with one horror story. First they say that if this is fallen, some story they will say. Why? Because to sell, first they create a fear. And then they say, look, we have got one extended warranty. For next 2 years, we will straight away replace on that day. That sounds very nice. Followed, no? But since it comes with the extra cost, we may take a decision not to, Baba, first of all, so much loaded, I will take the risk. Alternatively, they could have loaded that, no, here. See, it's all marketing gimmicks, students. Please, I missed one thing in my life, in my corporate life. See, I started my career in commercial department, being a chartered accountant. So I spent 2 years in commercial department buying material. So I was a victim of marketers, because on my opposite side, marketing people were sitting. So I was a victim. I never got a chance to work in the sales department. If I would have worked in the sales department, that insight of marketing, no, I would have learned, I would have understood what marketing means. Because you work in the sales department, no, you have to test that marketing on the other victims. No, I don't say victims, huh? Consumers, customers who have got whatever problems or whatever it is. Followed, no? So if at all you get an opportunity in your corporate life to work in the sales department, at least 2 years, please work. Because see, you need to learn marketing skills, students. When you go to the top, whatever it is, business, there are two things. One is content, another is the marketing. Because you have got a fantastic content, you don't do marketing, it is nowhere. Marketing has to be there. But you have got one worst product. You cannot fool around people by selling that. But that is the combination of a good product and a good marketing, no? You will create companies like Apple. Okay. Are you clear about this? That's it. A very small aspect. See, we are done with the big thing. We are a small aspect now. Let us see, is there any theoretical part on the warranty? Theory questions. Now, entity manufactures and sells computer includes an assurance type warranty for the first 90 days. What it is? Assurance type means what? Manufacture or extended? Manufacture, default. Assurance means default. That means assurance warranty is not a separate performance obligation. You need not bifurcate. Instead, as per Ind AS 37, you have to make a provision for a warranty. That's why, students, in the P&L account, if you see warranty provision, which is a subject matter of deferred tax, because income tax may not permit that. Now, if you see warranty provision, that warranty provision is created for assurance type warranty. Why? Because if you would have given service type warranty, you would have bifurcated the revenue amount only, no? You will not recognize full revenue. Full 350 rupees is not recognized. You will break up into 340 and 10. 10 is not recognized as a revenue, as a contract liability. Means ultimately in balance sheet one liability should sit on your head. If it is an assurance, you will pass an entry warranty expense account debit to warranty provision. If it is service type warranty, you will bifurcate and say bank account debit to revenue to contract liability. Have you understood? Now, there was that optional extended coverage plan. It will repair and replace defective plans from the type. Since the optional plan is sold separately, entity determines that the 3-year plan for this is a service type and it is having extended warranty worth 36,000. The total transaction price for the sale of computer and extended warranty is 36,000. So this is my transaction price. With this you have sold two things. One, you have sold a computer with assurance warranty, which is not a separate performance obligation, and you have sold one extended coverage, which you generally sell separately also, which is for a period of 3 years. The entity determines that the SSP of the computer is 32,000 and the extended warranty is 4,000, and together you sold at 36,000. That means you didn't give any discount only. In exam it may come with a discount. Since there is no smaller bundle, you will distribute based on SSP. The inventory value of the computer is 14,400, cost of goods sold. Furthermore, the entity estimates that based on the experience, it will incur 2,000 rupees to repair the defects that arise within 90 days coverage period for the assurance type warranty, for which you have to make a warranty provision as per Ind AS 37, because you didn't separate this 90 days cost. Pass the necessary journal entries and how the above transaction will be accounted. So how do you answer this? Okay, can you pass the journal entry? Let us check the journal entry. What do you pass? Can you suggest me the journal entry here? I'll plot the journal entry, whatever. See, first is the theory. Theory means same story you will tell, that there is the assurance type warranty, the service type warranty is there, there is a separate performance obligation, it should be bifurcated, it should be distributed based on the SSP. All some history you will write. Ultimately, we have to reach one journal entry, no? So when this 36,000 rupees worth contract is sold, bank account is 36,000. Can you tell me the journal entry? Huh? How much? Yeah, please tell me the journal entry. Whatever you sell, I will write. To revenue, how much? How much is the revenue? You have calculator, no? Please calculate and tell me. Or does it calculator required? No. How much? 30? 32,000. Very good. Why calculator is required? Because if discount was there, I should have had a calculator to allocate it. Yes, students. Yeah, please tell me. I'm waiting for you. 2? Okay, 2 provision. How much? 4,000. Will I make a provision for this? Did I fulfill that performance obligation? What is this 4,000? Extended warranty. Did you fulfill the performance obligation the day you sold? That will start from 90 days, no? That you proportionated. That's why you gave. What you call for this? It's a contract liability. Because something you received. See, this contract had got 2 performance obligations. One was at a point in time, another over a period of time. The second one was the extended warranty, which is a service type warranty. Now you bifurcated based on the SSP, and since it is not yet fulfilled, you will transfer it to the contract liability. Are you clear? So are you clear, students? This is a contract liability, no? No. 2,000 is your estimated cost that you may incur the repair within 90 days, during which it was subject matter of a assurance warranty. You may think, see, you gave sold one computer, it has got 2 warranties. One was assurance warranty, which is not a performance obligation, and this is only for 90 days, 3 months warranty. But see, as per Ind AS 37, the day you sold, one obligation came and sat on your head. Did it sit on your head? For next 90 days, you have to support them. That is why standard says, Ind AS 37 says, you estimate that what you may incur and recognize right now, because right now you incurred it. That is 2000, because you think that in next 90 days, you may incur 2000 rupees for supporting assurance. No, because when you give this extended warranty, your extended warranty will start from 90 day or it will start from day one. How come? Then that means he is fooling, no? It will start after 90 days, no? Because 90 days so definitely he will give free of cost. And you are paid separately for this, which will be starting from 90 days. So that will start from 91st day to so and so. But you need not know provision for this. Why? Because you never recognize the revenue only, no? It is not 34, Baba. Where is 34 here? No, not in that. See, you incurred 32, no. So they say, read the question no here. Furthermore, the entity estimated that it will incur 2000 for cost of repair within 90 days. See, somebody comes within 90 days. Will you give this to repair for assurance department or service department? And did you collect something separately? No, that's why you have to make a provision for 2000 rupees. And somebody comes on 95th day, whom this you will hand over this mobile? Service department. But service department, you didn't recognize the revenue. You will deduct that much of cost and recognize the balance. Yeah, that's what we and that, see again here, is this transaction price variable or fixed? Then we don't apply the 25% here, no. We are applying here estimation for Ind AS 37, my estimated warranty cost. Yeah, this includes two things, one computer cost and warranty cost incurred. That's what 115 says. If it is assurance, don't bifurcate again. You club it with the asset only, means the revenue only, and separately create a warranty cost provision for it. So my P&L would look like this. P&L will look revenue 32, warranty cost provision 2. If you tell me, sir, bifurcate this also, then my revenue 30, warranty cost provision doesn't come at all, because I already have bifurcated and kept it as a reserve, no, as a contract liability. So today, when I sell 36,000, yes, 36,000 has got three components. Say for example, that 90 days cost is 2,000, no? One is 32, which is pure computer. One is 2, which is 90 days warranty. One is 4, correct, no? No, did I miss it? 30. One is 30, 2, 4. And this is 91 days to 365 days. Now, standard says, look, out of these three performance obligations, three promises, sorry. There are three promises. How many performance obligations? 2. This 2 is 1. This is another. So when you recognize total transaction price for performance obligation is 32 plus 4. 32 you recognize immediately the moment you deliver the contract, mobile. But problem is, after you may incur 2000 rupees related to this performance obligation, make a separate provision entry here. But for this 4, don't recognize revenue only. Whatever money received, keep it in the balance sheet. One more provision entry will pass. Yes, one more provision entry will pass. That is an estimated number, no? It may change also, it may not change also. If tomorrow no cost comes, you will reverse this. You will hit to the P&L account. Which one? No. It's a revenue. In your P&L account, 32,000 is going to come, which includes your warranty cost provision also. Warranty cost allocation also. Which one? That and no, warranty is not over a period. Even though, exactly. Your doubt is this 90 days over a period of time? Yes. But 115 says that since it's an assurance which cannot be separated from the mobile, it is part of the mobile only. So what is mobile now? Over a period or at a point in time? They treat this also at a time. Very good, Baba. I never thought that this question will attract so many questions. For me, all time I was to, oh, this is the entry and I used to proceed. Have you understood in principle what it exactly is this question? Okay. So now the entry will be cash 36, contract liability only for service type, revenue 32. And separately you have to pass the entry warranty expense which will go to P&L because you recognize full 32 to warranty cost. And then since you have sold, they have told the cost of the machine also, the computer also, cost to inventory 14,400. Estimated cost, because today when you have to pass this entry as per Ind AS 37, this entry has to be passed the day the item was sold, because on this day you got into an obligation because of your past event. What is the past event? Sale, in which you cannot avoid it. That's why as per Ind AS, this entry is not coming from 115. Huh? This entry is coming from Ind AS 37. This is from 115. And going forward, when you actually incur the expenditure, for example, after 60th day, you actually incur the expenditure. What entry you pass? Accrued warranty cost account debit to cash. It is exactly same like Ind AS 100 and Ind AS 19. There was one overtime work, leave carry forward. You make an estimate, next day he may not take 3 days. So you made a provision only for 2 days. Next day he actually took 3 days. That one day only will get carry forward next day because it's the change in estimation. This is the change in estimation now. Actually, in reality, you may incur 4,000, you may incur 1,000, or you may not incur anything. That becomes a change in estimation, but it should not stop you from not estimating right now. Perfect, very clear. Dot. Yes. The entity recognizes the warranty provision for only for assurance type as actually warranty costs are incurred within first 90 days. So recognizes the contract liability for service warranty and recognize the cost as a service, recognize the cost associated with the service type warranty, and as and when you incur, no, then you pass the entry contract liability to cash. And suppose assume that in next 365 days no claim comes. This is you separated from 91 days to 365 days, no? Next 365 days no claim comes. Revenue, contract liability to revenue. Or if you want to say revenue from warranty business, warranty segment, that is segment what you define, no? Is it your separate business there? Yes. Why? Because they said no, you sell extended warranty separately. That means in your business there must be 2 segments. So 108 becomes applicable. Operating segment. Operating segments. In Inter it was there, no? 10% revenue, 10% sale, 10% profit, 10% asset. It's a disclosure, 75% overall level. We are going to learn that. Anyhow, that is also covered. You see the interconnection, huh? Then it is going to be applicable like that. You simply cannot say revenue. Now, on what basis you define operating segment, we will learn in that stand. Now, entity sells 100 ultra life batteries for 2,000 each. What is the transaction price? Okay, if it was full stop, bank to revenue, customer to revenue. But provides customer 5-year guarantee that withstand. Okay, is this 5-year guarantee is your assurance type or warranty type? Sorry, assurance type or service type? Assurance means manufacturer. Legal. Service means something extra. This 5-year guarantee, is it assurance type or service type? Service type, no, Baba. Assurance, nobody will give so long. Any manufacturer, you buy car also, 6 months warranty, 1 year warranty, 5-year warranty. I have never heard. Please tell me if anybody is going to give you service warranty, sorry, assurance warranty for 5 years. Now, entity normally provide 1 year guarantee to the customer for purchasing ultra batteries and determines that years 2 to 5 represents a separate performance obligation. Have you understood this language? That means in this 5 there are two breakup. One is 1 year warranty, which is assurance, which you need not separate from this. Another is 4 year warranty, which is actually extra. It's not 5 year warranty, and they are fooling people. 5 year warranty. In 5, 1 year by default you have to give. Now the entity determines that 1,70,000 of 2 lakh should be allocated to battery, because you sell 2,000 into 100, 2 lakh. Out of 2 lakh, 170 should go to battery with assurance warranty, and 30,000 should be service warranty, which is year 2 to 5, which is, how did you bifurcate this? Based on the SSP and selling price allocation. See, what is SSP? SSP means your list price. What is your RSP? Which is your estimated price based on the adjusted market price, competitor price. That's why we call them RSP, relative selling price. If they use the word called SSP, it is a standalone selling price. That means you sell them on standalone basis at a list price. If they use the word called RSP, no implication from your accounting or whatever, but you should know the meaning of that. RSP means they must have arrived at residual approach, and there are 3 methods. And what is your normal 1 year cost? 100 rupees. That means what is the cost you will incur to service that for 1 year? 100 rupees. What is your journal entry? Now you should tell me very clearly. Bank account debit how much? 2 lakhs. Revenue 1,70,000. Contract liability 30,000. Then provision for warranty to this. It is not 100. Yeah, 100 rupees into 100 batteries. So cash to revenue to contract liability, warranty to this. So contract liability is revenue over a period of 3 years, 2 to 5 years. So every time what you do, okay, it goes like this. Every year they do it on a SLM basis. How? 4 more years, no? So every year you recognize how much? 6,750 rupees. And if whatever cost you incur, you say P&L account debit to cash. So you finished 1 year. So from now onwards, your assurance type warranty is going to start from 2 to 5. Service type warranty is going to start from 2 to 5. So can I do it on SLM basis? This 30,000, can I recognize on SLM basis? Because it's fixed, no? So 30,000 divided by 4, 7,500. Every year I will pass an accounting entry, contract liability to revenue 7,500, 7,500. What if I incur one cost there? Then I say P&L account debit to cash, say 100 or 1,000 rupees. For simplicity, other ultimate effect is what? Contract liability to cash, ultimate effect. But I will not do it. For simplicity sake, I will transfer 1/4 of that to revenue, and whatever actual cost incurred, I will debit to P&L. Why? This makes a matching concept perfect. Because this year you transfer so much to revenue, and related to this you incurred the cost. Perfect? Okay, this question came in the examination, November 18. You have to tell me. Deluxe bike sold an extended warranty of 2 years for 87,500, while identical bike without the extended warranty is 80,000. And warranty given in the market, equivalent warranty is given in the market 10,000. How should you recognize the revenue on the bike? Tell me finally the journal entry. Tell me the journal entry enough. Bank how much? 87,300. Sorry, to revenue 80,000. To contract liability 7,300. Will you see everyone, students please pause the video, take out your rough book and pass the entry. Or are you sure? Are you okay with this? See, in exam, one time only you think, then you start doing it. So before you telling, please be careful. Now, have you accounted that whom you gave this discount? Entire discount, you loaded it on the service warranty. That means you didn't give any discount on the bike. What you should have done? You should have allocated, no. How much allocate? See students, how they twist it. I showed you plain study material question and this is an examination question. You see how they do it in the examination. Study material, they didn't offer any discount to fool you as if they straight away take 34 and 36, 4 and 30. So what you are supposed to do? No? You have to allocate this. Followed, no? So you say that there are two performance obligation. Second is a separate performance obligation. So allocation happens 77,600 and 9,700. So you have to recognize accounting entry. Bank account debit will be 87,300, but to revenue will be 77,600. Easy question for 5 marks, no? But you clubbed and given, no? Generally you don't give. If you would have sold on a SSP basis, you would not have given. But did you not give one composite package, no? With the discount? Yeah, if this is because it is a service warranty. If it was not a service warranty, entire would have gone to this. And manufacturer is not a fool to give you that. Understand, it is all marketing gimmicks, what they do to attract you. It's a cost, no, Baba. It's a separate product, no. It's the cost. He has to keep those engineers ready so that after, because generally the complaints will come after 2 years there. Then I need to have my engineers to solve their problems. Should I not pay them salary, make them wait when you are going to come? That's why if I don't sell this separately, I have to estimate cost plus margin basis. Okay, so understood, no? How the questions will come. That's it. Okay, before we sell with the right to return, we'll solve some more problems. In fact, this problem I should have solved it. Sometime I miss an opportunity. Okay, take out question number 16. An entity enters into a contract for sale of product A for 1,000 rupees and they give the customer 40% discount voucher for any future purchase up to 1,000 rupees in next 30 days. This question has come in MTP also. Probably it may come for 4 marks. It has come for exam also. See, probable question. You should develop that judgment. Now understood? You sold a product today. What is the transaction price? 1,000. Provided this full stop was there and nothing more further was there. But along with this plus, you gave one coupon. And that coupon will give you discount up to 1,000, not unlimited, 40%. So what is your additional cost you incur? 400 rupees. Because that person may come and buy, definitely when you have got a coupon for 1,000 rupees, what you will do? You will try to take full 1,000 rupees benefit. So I know that with this sale, did I not incur 400 rupees loss? Or should I club this contract with the next sale also? Same, no? Same story that you gave that membership. When 7,500 rupees somebody purchased a membership, you gave one discount coupon. I told you that question also you could have treated like a material right. And that discount coupon you can redeem when next year renewal. And what is the worth of that discount coupon? 1,000 rupees. So when somebody took a membership now by paying 7,500, I gave 2 discount coupons. So if you want next year, instead of paying 7,500, you redeem this 1,500 discount coupon and pay me 6,000 rupees. So I cannot treat that contract independently because this creates one more obligation for me in the future. In next 30 days, the entity intends to offer 10% discount on all the sales next 10 days because of the seasonal promotion. So how much is your actual cost? See, 10% otherwise also you are going to incur marketing cost. So by giving him 40%, did you really incur what right you gave him? How much extra right you gave? 30% only. See, I gave you one right of 40%. But even though you have not purchased and you will come to my store after 1 month, 10% so by default I am going to give you. 10% throughout the year I will give for every customer or seasonal discount every time. By this transaction, how much additional discount I gave you? No, the entity intends to offer discount on all sales during next 30 days. When? During this, that means from now on, next 30 days, by default I'll give 10% to everyone. And for you, I will give you 40%. Why? Because you have purchased right now worth 1000 rupees. Can I cancel after you buy? Can I cancel this? No. Why? Because already you have purchased from me. That means one obligation is sitting on my head. Can I cancel this 10%? Anytime. I don't have any obligation only. Today I have put the board. Tomorrow morning I can cancel it. But I cannot cancel this 40. But out of 40, 40 is not my cost because 10 is also simultaneously running here. My additional cost in this transaction is only 30%. That is material right. That is something extra advantage you got. You didn't get 40% extra advantage because 10% advantage so by default you will get anytime you as a walk-in customer. Understood the story here? 10% by default you will get anytime you walk in. But buying this A, product A, what is that extra benefit you got? They will fool you by telling 40% coupon. It is actually 30% extra you got. Because in this transaction, my additional cost is only 30% because 10% is the marketing cost by default. However, the 10% discount coupon cannot be used in addition with 40. You cannot take 40 plus the existing 10. If you could have done that, what is my cost? No, 40%. 50% is my total cost, agreed. But out of 50% total cost, 10% will go as a marketing cost, 40% will go as a contract liability. Now, since you cannot use both the coupons together, 10% is my marketing cost, 30% is my contract liability. Because this is what you extra advantage you get by using this product A. You can imagine, students, what I am trying to tell here. As if you have gone to one store and purchased worth 1000 rupees and he gave one coupon of 40%. How much worth you are happy? 40% you are happy or 30% you are happy? If you feel 40% happy, you have become a victim. Why? 10% by default he will give to everyone. Simply one big number he showed there, 40% discount. In reality, the actual advantage you got was only 30% because of this purchase. You got 40% benefit only, I agree. I am not denying that. But because of this purchase, how much benefit you got? 30%, that you understand. That means that 30% benefit is associated with this product. If you don't want this product, you get only 10%. With this product, you get 40%. So how much incremental only because of this product? 30%. Have you understood this now? On whatever you buy. First 30 days. And during this time only, during next 30 days. It is not that, okay, today day 1, 30 days over, you are eligible for 40% discount and from here you will give 10%. Are Baba, on 30th day this coupon is lapsed. No. If you come on 31st day, you will get only 10%. Which one you will choose? You will opt no. And during this time, is he giving 10% to anyone? No. Then your benefit is 40% because of this purchase. But since it is overlapping, first 30 days it is overlapping. Yeah, your question is very genuine and valid. But understand the implication because the exam twist can happen because he intends to offer 10% on next 30 days starting from 1st of December for the Christmas or New Year celebration. And this 40% coupon is going to lapse on 30th November. In that case, your actual material right is 40%. But if it overlaps, your material right is only 30%. Are you clear about this? Here, yes, we are assuming that it is overlapping. It's same next 30 days, both are simultaneously running. That's why I should assume. They said no, 10% discount cannot be used in addition to 40. That is, this sentence itself says. Otherwise, they would have told, how can, if both are after that, then how can you use the 10% during 40% period? The entity believes that 80% of the people will come back and they will buy. But how much? Worth 500 only. So if I ask you, by selling 1000 rupees, you got one headache on you. What is the cost of the headache? Cost of the headache. Headache means by buying this 1000, you made one promise. The promise to give you something extra. That will cost you now. What is the cost? And how much you estimate today that cost is? See, now, because of this, they got an incremental benefit of 30% to be applied on 1000 rupees. But will every customer will come? No. 80%. Will 80% will buy full 1000 rupees? No, 500 rupees. So you are going to get 500 rupees worth of people purchased by 80% of the people with 30%. This is your cost of discount, which is sitting in this 1000. Now that you need to bifurcate between two people. So 1000 has got two performance obligation. Towards product, you have got 880, and towards this material right or discount coupon or whatever you call, 120. And when you can recognize 120, today you have to keep it as a contract liability. If the discount is redeemed, then recognize this as a revenue because you are getting extra benefit there. It's like a service warranty coupon. You call it by any name. Loyalty point you call, coupon you give, voucher you give, you call it service warranty. But some cost will be incurred in the future. It becomes Ind AS 8, change in the estimate. Yeah, maybe 900% of the people may be going 100%. So in the next period, that whatever you today assumed 120, but whatever extra cost you will charge it to the, that means your contract liability debit extra will go to P&L. Anyhow, determine how many performance obligations are there and their SSP. Whose SSP? How many performance obligations are there? 2. What is SSP of A? 1000. Standalone selling price is 1000. What is the SSP of that extended discount coupon? 120, which you need to estimate and allocate the transaction price. Now one has to be allocated. Followed, no? So nice question. So write one performance obligation. And see, this number of performance obligation can come in the form of discount coupon or a material right or service type warranty. In the deluxe price bike example we told, no, there are two types of performance obligation. One is the bike, another is a service type warranty. There are material right. I will give you a shortcut, okay, here. Worth 30% only. Why? Because 10% is generally given all time. That anybody will get. So by this purchase, I am giving you 30%. This is a separate performance obligation along with product A. Or you can say that there are two performance obligations, one product A and material right. Are you clear? Very nice. So see, understand in detail so that you are very ready for the exam. Let them ask any way, you will be able to tell. So you say that there is a material right only for that additional 30% discount, and it is a separate performance obligation. Who tells you 115? Because you would have, why you should incur that? Why you are saying that every discount will have a cost? No. Now calculation of the SSP. SSP of discount. SSP of product A, you know. What is average price of additional goods? 500. Because everybody will not buy 1000. Generally they will worth 500 rupees. And what is my incremental discount? 30%. That means if every 100% would have come, purchased worth of 500, additionally 30% I would have incurred. How much it comes to? 150 rupees. But will every 100% will come? No. So number of or probability of exercise. 80%. So SSP will be 120, which is A into B into C. This is the presentation. So that somebody will understand what did you get, how did you get this 120. Are you clear, students? The second part of the question is done. What did they ask you third? Allocation, right? Price allocation. Your PO, how many POs are there? Third, allocation. Performance obligation is A and discount voucher. How much you will allocate to A? Okay, what is your transaction price? 1000 into, what is your SSP of A? 1000. What is SSP of discount voucher? 120. So adding both 1000, 120. You allocate only 890. See, there are more questions which I am giving as a phase 2, okay? The famous question is KK limited. There's one big discount voucher related headache problem is there. You do it later. Probably because it came only in RTP. If it would have come in study material, I would have taught you now. And the discount voucher SSP is 120 into 1000 is the contract price. 120 divided by 1120. 1000? Yeah. In 1000 rupees transaction price, 120 is hidden. No, that standard didn't permit. No, standard says you have to distribute the discount on SSP. Because if I see what is the total discount, 1000 plus 120, 1120 should have been the total price. But 120 is the discount. Now, is this discount on a standalone basis will you give to any bundle? No, then distribute for both on SSP basis. Yes, it is addition to 1000. No? Because if you would have sold without any discount coupon, you would have sold 8000 rupees. To attract customer, you sold product A with discount. That means this is the standard. Why we are doing this activity? This is what your standard told. This is what the way allocation should happen. We would have done this. What you said is correct. Directly 120 would have given to someone, provided at a smaller bundle level, you would have given this discount on a product that you remember ABC product, B and Y and X, that this sold on, then you would have given this. So you should know now. If they twist the question, same question comes, beautiful, you feel like jumping now. Wait, see, read it fully. God knows where they have twisted at which end there. Doesn't matter. I will have one person will either buy 2 or either buy 1. No? Then that means there will be one transaction applicable. So that means how it for either you will do 1000 purchase or you will purchase 2000. So again same story goes there. So if it is a 2000 rupees, then my SSP is 2000, discount amount will be something different, say 300. And that 2000 transaction price would be 2000. That I will distribute in this ratio. If it is 1000, this is 1000. At the same time, how it is 1000 also, 2000 also? Not possible. Yeah, doesn't matter. Whatever it is, whatever is sitting. Now, what is the slab rating? If you buy more than 1000, 30%. If you buy more than 2000, 40%. No, now you see, now I understood, it's not 10% material, right? You should see, if I don't enter into any contract only, do I get anything? No, 0. Then in the first case, my material rate is 30%. If this contract only not entered, will I get anything? Will I get 30% just because I didn't purchase 2000? No, I should have been there, no. So 0, 40%. Perfect? Everyone clear? Yes. So entity recognize, okay, right here 890 as revenue, entity recognize rupees 890 as revenue when A is sold at a point in time. Why? Because none of the three conditions will fulfill. Is it an intellectual property right? Then we have to see whether all conditions will fulfill. Then discount revenue is recognized when one, customer redeem, that means next year customer comes, you reverse this contract liability, or when it expires. Once it expires on 31st day, if he comes and shows you this discount voucher, will you entertain them? No. On 30th day only, whatever contract liability you have accumulated, no, you transfer it to the revenue. No, he comes on 15th day. Once he buys, is material right or gone? There are two scenarios, no. See, you have passed one accounting entry. Is this clear, no? This theory is clear. Should have written a theory like this in detail. See, you pass one accounting entry, bank account debit 1000 to revenue 890 to contract liability 110. There can be two scenarios. One, he comes on 10th day and takes this coupon, versus he comes on 31st day. See, when he comes on 10th day and takes this material right, does it make sense to keep this contract liability anymore in the balance sheet? No. Fully reverse contract liability to revenue, because on the debit side, discount to cash has happened or inventory has happened. But that discount is not given in this period. That discount is pertaining to the previous period. That's why corresponding revenue will come now with the matching. Now, if he comes on 31st day, he cannot redeem the voucher. I will cancel it. So, whatever contract liability was there, that becomes my revenue now. That means what discount I originally granted, that was not valid only. You could visualize. Okay. Oh, I have given the general entries. Not required. They didn't ask you. That is for our understanding. This is my. If the customer purchases additional, then I will say contract liability to revenue. If buys additional 1000, say for example, then I will get reverse only this much. Okay. So whatever discounts, additional discounts are there, it will be sitting here. If the customer buys additional 1000 material and redeem the discount voucher, that means my liability was done only for 10%, which is 500 rupees. So that means it will reduce my additional revenue here, which is nothing but a discount only, no? So it's a change in the estimate. It will be sitting in this revenue. Because you should have paid me more money now. You should have purchased only 500. No, he purchased 500 with this 40% discount, 1000 with 40% discount. So extra will get loaded here. What if the 10% is provided in subsequent purchase which match with the general discount? Oh, that means discount coupon also 10%. What I generally give also 10%. They simply fooled. Then that case there is no material right. You pass bank account debit to revenue 1000 and whatever discount, no, that will go to, it's a marketing expense. To call you next time, come to my store. I also already plan to give a discount, just to call you next time, please come, I'll give one voucher, so that by looking at the voucher you come to this thing. So it is a purely a marketing expense. There's only one performance obligation, and whatever discount cost you incur next period, no, it is a marketing cost. So this is my accounting entry. Okay, I don't make any provision because it has no material right. Or if you say there is a material right because of this, then you will make a provision for the future discount. It's like a provision entry. My favorite question of all in entire standard. This, I think this question has not come for exam, no? This is my most favorite question. But to come to this, we have to wait up to point number 7. Because we are in point number 3, no? The last aspect, sale or usage based license warranty, that we need to discuss. Okay, before that, we will discuss sale with the right to return. When we have come across some place, but we never applied it. Only one place we some discussed about the journal entry.